Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday. We're still all holed up in our houses. Market Webcast. Okay, so daily chart, and we had talked about the multi-day rally. This week has been the multi-day rally. 2174 Sunday night into Monday night. Limit down. They couldn't pop it up off the bottom, and they ripped it Monday. They retested Monday to 2179, but they couldn't get that done. Then it was rally. Now, all the way back up to the daily mid-band. I talked about this earlier. I didn't think they had 26s in them. I really didn't. But you know what? That's okay. And the difference between us and other people is when I say, I don't really think they have 26s in them, but we were long all the way up into it. Because if it's going to go up, then okay, that's cool. It doesn't matter what I think. The tape doesn't care what I think. It doesn't care what you think. It doesn't care what anybody thinks. It sure as hell doesn't care what anybody on Twitter thinks. It just doesn't care. It's a tape. It's price. It's risk. Bear market rallies will always run farther and faster than you can, than anybody thinks or you want them to go. And what we're left with here is a pretty decent test of the daily mid-band. We put in a high at 26.34.5. It's made some lower highs. Volume weighted average price held it in at about 2 o'clock in the morning. We were short from 25.95, got into a good one, came back up and retested, stopped me out. Some of the people in the room that have better time zones than me for trading at 2:30, 2:45 in the morning were able to get right back in against our risk marker, which wasn't violated, and take it back down. We had a risk marker at 95. As it came in over the course of the Europe session, look, Europe had no interest in buying it at all. They've just been steadily bleeding it to the downside. 5-minute mid-band has been resistance. So we have our proprietary moving average at 46. You got daily pivot coming just in under 25.50. You got the hourly mid-band now up at 25.76. Volume weighted average price at 25.69. Let's go to the hourly, let's go to the hourly chart. Yeah, I know what kind of chart it is. There's your daily mid-band, okay? It stopped it, all right? It's now below hourly mid. You can see how the bands kind of flattened out into yesterday, and then they popped it, and they ran with it in the morning, flattened it out, and now it's coming in. So we've had multiple looks at weekly pivot. Bulls are trying to take advantage of the fact that they won weekly pivot, trying to get that directional day going. So they can still pull it out of the fire, but what you don't want to have happen, is you don't want to be making lower lows here, and you don't want to break this roundy and then run back into the 9-day. If you do, this is high noon, okay? Let's go back to the daily chart. High noon for this rally is right here. If you lose it, then the chances of you losing the whole thing are pretty damn good. And we get into the same question that was posed to everybody on Friday. Okay, show of hands, who wants to be long? Who wants long risk over the weekend? And a lot of people are going to be like, you know what, I'm all set. No thanks. I'm going to stay over here. We'll see how, you guys go ahead. We'll see how it opens up Sunday night. And, if that's the case, then you're going to see it come in. Unless the bulls demonstrate some more follow-through and convert the green line, if you lose the low from yesterday at 24.02 quarter and thereby convert the 9, then what you'll be left with is, okay, well, we came down hard. They popped it back to the daily mid-band. It held where it was supposed to hold, right? Because one of our baseline rules is if a future wants to trade between the middle band and the lower band, that's a sell rallies market, and that's your, and if it goes down far enough, that's your bear market scenario. We remain 500 handles, 400 handles below the 200-day and the 100-day. I mean, we're not getting involved in this up here. We're simply dealing with the 20, and we're kind of jammed between the 9 and the 20. If it decides it wants to live below both of those, then a retest of the lows I mean, or at least a retest of this area to carve out the triangle we've been talking about is definitely on offer. So, last look at the hourly. You see it there. You see it there. Resistance there. Bulls have to defend this. They need to put a day together. They do, and they have to survive the close. Where I just don't think a lot of people are going to want to be long over the course of the weekend. It makes too much sense to just step aside. And I still think there are larger institutions that want to bring it in, and kind of get another look at this down here for the purposes of of buying. Now, if the whole thing breaks, then we can talk about that next week. But let's take it one day at a time. Right now, we got our multi-day rally. So far, it's stopping at the daily midband. It's pulled in from here. Let's see if it can hold above here, and we'll see where we're at come Monday. All right. Have a good day. Have a good weekend. Stay safe. Stay healthy. Take care. Trade them well. I'll talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.